Hello and welcome back to London. I've spoken to many great guests in 2012 and it's time to get their views on how they think next year will shape up.
Macroeconomic prediction for 2013 is very much more of the same as what we've seen in 2012. A year of very slow grind, slow incremental gains across the course of the Western world.
So next year, I think we're going to see the markets pick up slightly. I think we're going to see risk appetite return to the markets.
I think the key macroeconomic theme in 2013 will be a move away from the pure binary risk-off, risk-on mentality. And I think more of a focus on the underlying fundamentals, not least of which is we continue to be in a world which operates under unconventional monetary policy operation.
Central banks are going to keep printing money. Bank of England governor designate Carney, till now a paragon of virtue, has also joined the printing bandwagon by saying that he's going to target GDP instead of inflation. Q1, it's probably going to see markets going up, but after that it's going to be a very rough ride for markets. I would expect anywhere between a 20 to 30% decline in stock prices from the peak. I believe it's a good idea to stay long volatility.
The Eurozone should quieten down. I think we are out of the debt crisis in the Eurozone, and it's more of a slow growth crisis. Germany may be the only member of the Eurozone that grows over the course of 2013. France, the Netherlands, Austria, Belgium, and obviously the periphery of Spain, Italy, and Greece are likely to fall deeper into recession.
I think there are reasons to be optimistic in 2013. If we look at the global economy in 2012, there's been slow progress from European leaders. However, it seems like Europe is on top of its debt troubles. The funding crisis is over. Although there is political uncertainty going into 2013, we still think that the status quo wouldn't change with German and Italian elections.
The future's a lot brighter for the Eurozone. I think we've got that Italian election in February, and while there has been a bit of panic in the markets at the moment with Silvio Berlusconi claiming he's going to run, I don't really think he really has a chance in this election. He is going to gather support over the next couple of months. He does have supporters who are loyal to him, but I think this Democratic Left Party are far and away the favourites here, and I do think they are going to take it, especially if they can get Mario Monti on board.
Considering how the predictions are being formed for the whole economy, for the whole Eurozone, I think DAX still has good room for a very good performance in the next year. Starting off with the fundamentals, the German companies that are in the index itself, they are quite well positioned in terms of the export mix, in terms of the equity. They are increasing the equity levels, at the same time decreasing the debt levels, and they have done their homework by restructuring and optimizing their operations.
Conditions in Greece have eased, conditions in Spain have eased since they requested that banking bailout. We could still see them ask for a full sovereign bailout or get this aid from the ECB, but I'm not so convinced at this moment in time. I think with the bond yield still around that 5% mark in the bond market, I don't really think they do need it at this moment in time, and they are progressing with these reforms. So I don't really think that Spain will need this bailout. They may just be pressured into it by the markets at some point, maybe in the second half of next year.
At the same time, we can also look at the so-called US presidential election cycle. In the past, we have seen that the year after the election year, the German DAX has followed the US markets and has also performed quite well. So if we see that, if we see similar pattern this year, then this is also a source why I think DAX will do quite well in the next year.
The US will kick forward, and this is on the basis they do avoid the fiscal cliff. A grand bargain may not come out in the course of the negotiations in December, but maybe somewhere down the line, and that postpones the enforced austerity of the deficit reduction the US economy needs. So growth on a year-on-year basis in the US around the 2% 2% figure.
Over in the US, I do think we are going to get over the fiscal cliff eventually. Whether it's by the end of this year, I'm not so convinced. But I think sometime in January we are going to see an agreement between the Democrats and the Republicans. And again, I think the longer term outlook for the US is relatively strong. We have seen the housing market in particular start to see it really recover.
Here in the UK, very, very slow growth, and we're not looking for growth anything larger over the course of the year than 0.6%, highlighted by increased inflation, low retail spending, and low business investment in the UK as well.
Next year we see the FTSE 100 having another tough year on account of the US fiscal cliff, slowing growth in Europe and Asia, and overall slow growth across the world.
In the UK, I think we're going to see a lot of flat growth. I think George Osborne's I don't think George Osborne's going to change his policies of austerity and trying to get on top of the UK spending. And I think next year we are going to see a lot of stagnant growth. We could see that triple dip recession, but I think that's very dependent now on whether we do see some contraction in this fourth quarter. So, like I say, longer term outlook again is slightly a bit more positive for the UK, but I think we are going to see very much stagnant growth over the next 12 months.
Nonetheless, for the year we see the FTSE closing around 6,250, which is gains around 5% from current levels. And of note, we see that the long-term rising support in place over the last few years may well come into play early on in the year should the fiscal cliff resolution be delayed into January. So we see that kicking in around 5,700, providing another springboard for recovery in the early part of the year, providing gains to around 6,250 by the end of the year.
Okay, so looking into 2013, I expect the US to outperform the FTSE, as I feel commodities will come under pressure as the dollar gains strength, even though there is monetary printing from the US Federal Reserve. I like long US stocks, short the FTSE. I think Europe is also potential long against the FTSE as well.
As we move into 2013, we have to have a good year behind us, although many of the problems that populated the year still remain. However, I think we'll see for the FTSE, while some weakness may creep in if the Eurozone crisis rears its head, I do think a push beyond the 6,000 is entirely within the realms of possibility. Obviously, as we head into January, the US fiscal cliff remains the focus, but we still expect a resolution. And while the Eurozone remains quiet for now, some intensification of the crisis in Spain and Italy cannot be ruled out. That said, the strength of German economy is one of the lasting themes, so expect further good news from that quarter.